Hey everyone, my name is Oliver Turner. I'm the Executive Vice President of Corporate Development for America's Gold and Silver, and happy to be here on Crux Investor today.
Good to see you, Ollie. You've obviously been sort of trotting around the world and meeting lots of people, but last week saw the announcement of an acquisition.
Yes, that's right, absolutely.
Money raise.
Yeah.
It's getting busy out there.
It is, yeah. No, last week we announced the acquisition of the Crescent Mine in the Silver Valley, which is a great addition to our Galena complex there.
Yep.
It's only 9 miles away from the Galena complex and is a past producing mine that historically produced over 25 million ounces at 900 grams per ton silver. It is a mine that we can restart very quickly. Within about 6 months, we'll be into development ore there.
Yep.
A lot of existing development already into Crescent from the past production.
Yep.
3 adits going into the side of the hill that accesses the 2 primary veins. And so we'll be getting into there pretty quickly, and that ore will be going into the Galena and core mills, and we can talk about using that capacity in a second here. And the total acquisition price for that acquisition was $65 million. It was $20 million in cash and $45 million in stock. We went out to raise the money for the acquisition because all of the funds that we've raised so far have been for the revitalization and the scaling of Galena. So we needed additional funds to do this. Went out to raise $65 million. We ended up upsizing to $150 million. I can talk about the additional use of proceeds there, but we had well over $200 million of demand for that. So it was a very successful raise, a lot of demand for what we're doing. And very importantly, we brought in a lot of really strong new large institutional shareholders at this new level, which will be great for the stock moving forward.
Okay, obviously really positive silver price environment for you. A lot of new investors into the space for sure. Can we just talk about what you're trying to do? Because we've come off the back of last year and maybe the year before, we'd kind of a bunch of like pure play silver companies taken out for some pretty big numbers. They took a long time to get there. You seem to be kind of rushing towards a finish line of some sort. What is that finishing line?
Yeah, so I mean, look, when we took over America's Gold and Silver, which is basically about a year ago today, that's when you announced the first transaction. We started January 1st this year, but we announced that initial transaction in October of last year. We had a mine that has a huge amount of infrastructure, a massive resource base, but had some mining challenges. And we've executed this year, the reintroduction of long hole stoping, completing phase 1 of the shaft upgrades. We talked about some of that in the previous interviews, and really getting Galena well capitalized, back on its feet with our approach to mining 101 and bringing in strong mining practices there to really unlock what the full scale potential of Galena is. Now, we remember in 2002 that mine did over 5 million ounces, and we've been out there publicly stating that our goal is to bring Galena back to 5 million ounces. And we're not going to stop there. We think Galena can do more than that. We're looking at a variety of different ways. Right now, we're only using 1 of 4 shafts. So we're going to evaluate ways that we can take it beyond that. So that's the Galena complex, which is the core of the company. We've got Coastla down in Mexico, which the team down there is doing an excellent job getting into EC 120. That'll do 1.5 to 2 million ounces a year moving forward, which is fantastic and generates a lot of cash for the company. But what we've been looking at, the same thing that we did when we were at Karora, the same thing that we did when we were at Klondex is there regional consolidation that makes synergistic sense, right? You remember at Karora, we started off with Beta Hunt. We acquired the Higginsville mine and mill. Then we did what I think was one of the best transactions that we did, which is the acquisition of Spargos, which provided a lot of great feed while we were ramping up both those mines. And then the Lakewood Mill. And then obviously we ended up having 4 different suitors come along, and Westgold won the bidding process there. With America's Gold and Silver here, we've taken a look at everything in the Silver Valley and started to think about, well, look, we've got this spare milling capacity at Galena while we're ramping up that mine. The mine's got to catch up to the hoisting capacity, which is already catching up to the milling capacity that we have there. Can we fill those mills? Can we add additional tonnage into those mills over the next couple of years here while Galena ramps up? And the answer was absolutely yes. And with Crescent. So Crescent is, I wouldn't call it a tuck-in acquisition because it's actually more meaningful than that, but we had a great valuation delta on our paper. What we bought it for was around somewhere in the region of 0.2 times NAV. We're trading somewhere around 0.9 times NAV, so a very accretive acquisition. And look, this is step 1. And we've been openly talking there. Look, either we are going to consolidate more when the right opportunities come along at the right valuations, and we have the time and energy to do them. That's very important because we've known for the first 9 months of this year that we cannot take our eyes off the ball, let's just say, in terms of scaling Galena and getting that work done. If that mine doesn't work, the rest of the story doesn't work. So we've been doing a fantastic job there with the team and getting that operation up and running. The time was right for this acquisition. Obviously, we had that great valuation delta, a strong silver market, as you talked about. And will there be more in the future? I wouldn't say no. We're always looking at things. And you're absolutely right. Look, we've seen some tremendous acquisitions happen in the silver space in the last several years here. We definitely want to keep going, doing what we're doing, but the silver space is small. And are we a potential target for people? We're always going to be.
You've got to go. Look, you obviously go through a process. With Galena, you've got to ramp that up and get up to speed. But first, it's getting those processes in place, stress testing those processes, bringing in the right people as well is going to be a critical part of this for you guys. And then obviously things like Crescent absolutely help, and other kind of opportunities like that help. But they're rare. The rarest hen state, certainly on a pure play basis, right? You're not going to pick up some kind of silver byproduct type operation. So where are these going to come from, and do they need to be North America focused? And if you do kind of piece together multiple jurisdiction assets, what does that do for buyers? Are they put off by that, or is that something? Is it net ounces produced is the thing that they kind of buy into?
It's a good question. I think there's always a point in a market where maybe that becomes something that buyers are less picky about,
right,
and a little bit more agnostic about. But look, in the second quarter and in the third quarter, we had over 85% of our revenue come from silver. That's the second highest silver exposure in the entire space. Only Aya Gold and Silver is currently higher than us in terms of pure play silver revenue. We obviously have antimony in our mine as well as copper, lead, and gold. The antimony side of the story is certainly very interesting. We're actually also in DC this week talking to several US senators about the potential there. So that could certainly squeeze, let's say, some of the silver revenue exposure down a bit as antimony takes a bit of a bigger chunk there. But we're always going to remain silver focused. That's something that we understand that there is a multiple in the space due to scarcity of these operations. When it comes to targets and M&A, you're right. There aren't many of these assets anywhere in the world. They're actually predominantly in Mexico and where we are in the United States. So the Silver Valley is a great place. There's lots of different potential properties there that are different stages of ownership or development. And part of our job is to look at all of them. I think right now with the Crescent acquisition, we're going to be very focused for this next year on absorbing that, on making sure that Galena hits its stride, gets to the targets of what we're talking about here. And just like we were at Karora with Beta Hunt. You remember the discovery of the Fletcher vein there, right? There's always things that we looked at from an M&A basis, but it was very hard to justify doing those transactions versus organic growth inside of your own mine that you can literally be mining within a couple months. So Galena certainly has that character to it where there's a lot of new areas to explore. There's already a large resource base there, but there's just so many opportunities inside of the Galena complex. The reason why this transaction made so much sense for us is that no matter how fast we push, and we're pushing fast at Galena, and the team led by Evan Peltier there is doing a phenomenal job. He's had a huge impact, but no matter how fast we push there, those mills on surface still had spare capacity. We've ramped up throughput from about 300 tons per day when you first came in to just over 410 tons per day, but we've still got, at the core mill, we've got 500 tons per day, and Galena is 750 tons per day with another 300 ton per day mill sitting on the side, so potentially expandable there as well. We all know that idle mills are not how you want to run a business. So finding feed for that in the interim, this one just made all the sense in the world. We got it at a great valuation, and we'll be into that ore, which, by the way, it's worth saying for all of your listeners here, that ore is exactly the same tetrahedrite ore that we're mining at Galena. So metallurgically, it behaves the exact same, can be commingled with that Galena ore, and brings with it not only higher grade silver, remember, Galena's average grade is 466 grams per ton. You've got higher grade tetrahedrite ore, which is 600 grams per ton, and the lower grade silver lead ore, the Galena ore, which is around 200 grams per ton. Blending that average is 466. At Crescent, the grade of it is 655 grams per ton. So we're adding higher grade silver, and then with that, in tetrahedrite comes copper and additional antimony.
And in terms of the metallurgy work around that, so obviously antimony is being produced. The mine's been producing antimony for a long time now.
Absolutely.
We're talking about how do we include that as part of the payables. Copper, super high grade, but thin veining type stuff. I mean, we're talking like 16, 17%. I mean, it's kind of crazy levels, right?
In 149 vein, yeah, amazing.
Yeah,
absolutely.
Phenomenal. Yep. So in terms of the met work to date, and that's got to be a big part of the equation that you need to solve for next year, right?
So interestingly, because it is exactly the same type of ore, it will behave the same way as the Galena ore. So obviously we're doing some test work right out of the gate, but for all intents and purposes, that work is essentially done. And one of the things that we have done at Galena previously is actually batch between silver copper and silver lead quite successfully. Right. So there's a lot of flexibility built into those plants. That's not something that we're worried about. On the antimony side, that tetrahedrite, which contains the antimony, we're going to be evaluating how we can get that into a good concentrate product. Remember, we're concentrating to 19% at Galena. So that'll be contributing antimony byproduct as well. And then the copper is a very simple process.
Look, we were going to kind of catch up a few weeks before I danced off to Chile and Australia on the antimony with some of your team, because it's a big deal. It could be a very big contributor towards the bottom line for you guys. So I'm really intrigued in that. I'm intrigued from a point of view of what you're going to do operationally and obviously recoverables and on payables and all that kind of stuff, but also in terms of what's happening out there. It's getting a lot of attention, got a lot of companies talking a good game, as you know, antimony as a byproduct, antimony as, you know, as a pure play for them, and how you fit into that market if you don't move quickly.
Yeah.
Because it's kind of one of those things like, if you can move quickly, it's a barrier to entry for others, potentially. You talked about going down to DC. What's that about?
Yeah, so Paul's actually in DC this week, meeting with several different US senators on our antimony project. Look, we are right now the largest active antimony mine in the US. This mine has produced antimony since World War II. It's produced antimony for a very long period of time. We put out the last 20 years of production earlier this year, and year to date in the third quarter, we've produced about 450,000 pounds. As we scale more of that tetrahedrite ore, it brings with it obviously the silver that we're focused on. We are a silver-focused company, or it brings with it more copper and more antimony at the same time. The next phase of what we're doing, beyond the renegotiated offtake agreement that we had with Teck, remember we renegotiated that in June of this year, so we're getting paid for some of the antimony. It previously was a penalty. But to take it to the next level, we are evaluating potentially building a new antimony circuit in the Silver Valley. There's other groups in the Silver Valley I've talked about. Obviously, Sunshine's just down the road. They're going to be building a new antimony circuit as well. And actually, previously, historically, Galena's ore went to the Sunshine antimony circuit all the way up until 2001. So this has all been done before, right? We're not inventing anything new. These facilities are not complicated facilities. It's a series of leach tanks, electrowinning cells, and then making your final product. So we are looking at ways that how can we, either in joint venture with someone, potentially with the US government, how do we get an antimony circuit into that region faster? Because we're not going to wait for someone else to build one. We want to get one in there as soon as we can, because right now we are mining, hoisting, crushing, grinding, floating, concentrating, and sending that concentrate with antimony up to Teck. We could be processing that antimony in the Silver Valley or in the United States, helping solve one of these, the shortfalls that they have in terms of the critical minerals crisis, and getting paid far more for it. That has the potential for no additional cost to America's Gold and Silver shareholders, because again, we're paying everything to already mine this stuff, to add significantly to the byproduct credit line and drive, additional margin expansion.
Absolutely. And maybe let's kind of pick up on that in the next kind of week or two with your team about what that execution looks like in a bit more detail. Back in terms of like, what are people looking for in 2026 out of you guys? Obviously, getting everything operationally in place, as I say, stress tested, so you know what you can and can't manage. You've got to drive those ounces up. People are expecting you to kind of move through those phases kind of quickly. So what's the kind of time frame to get to, the sorts of levels of output that you've talked about in the past with me?
Yeah, so we've this year, purposefully, we did not put out guidance. We wanted to make sure we got all of our work done ourselves, right? We want to get our own mine plan done, redo the resource ourselves, make sure that we had all of our own information. So as of 2026, it'll be the standard procedure. We will have guidance out just like we did at Core, where we hit 19 quarters in a row. So we'll put out guidance for 2026. You're going to see a step up in production from this year. It'll be early 2026.
Okay, fine. Right.
Yeah, February, March time frame. That's sort of typical time frame.
Okay.
We'll have that out. So that'll level set all the analysts and the street in terms of what they can expect from us. In terms of that time frame on when we can get to that 5 million ounce a year mark, yeah, we're talking somewhere around 24 to 36 months in that time frame is when will be that analyzed rate. Can we do better? Potentially. It's all going to depend on how we ramp up our long hole stoping. The key factor there is the implementation, the construction of the paste fill plant. That'll happen next year. We expect that to be online in the third quarter. That allows us to then cycle those long hole stopes and at a higher rate. That allows us to get our tonnages up. So the paste fill plant is a big catalyst for next year, the guidance, and then of course integrating Crescent into the Galena mill.
Okay. What's the kind of register look like at the moment?
Oh, phenomenal. So look, we were, before this raise, we had increased institutional ownership from 7% to 63%.
Amazing. Right.
We will be well above that now again. We brought in some very large institutions, which when they report their holdings, I'll be happy to talk about them. But some of the biggest mining institutions in the world, some of them headquartered here in London, which you can probably guess, are now large shareholders of America's Gold and Silver. And we're looking forward to them driving it forward.
And obviously, very different from Karora in that sense, early days. So you're having fewer conversations, and I guess the longer term holders of the stock. So your message to the retail component of your register is what? What are they buying into?
So now, I mean, so the next phase of growth here is really accelerating things at Galena, capitalizing on some of these byproduct potential opportunities with antimony, integrating Crescent, which is obviously not in anybody's model now that we bought it in a very creative value gap. So for retail shareholders, especially with this recent pullback that we've seen in the market, it's a real chance to reload into a company that could be trading from somewhere around 0.7 to 0.8 times NAV. When you look at a lot of the producers that are in the category which we're growing into, they're trading in the upper ones, close to 2 times NAV. So there's a real opportunity for everybody, institutional and retail shareholders, to get involved here. Obviously, in the United States, we have a very large silver retail following, which has been driving the story forward for many years and has been a huge supporter of ours over the course of this year. So we're looking forward to getting out there more and seeing more of those shareholders. We're going to do a bit of a roadshow next year as well. So getting the word out there more and making sure that this is on the radar screen of every institutional and retail silver investor in the world that wants high exposure to silver with some pretty impressive byproduct credit potential.
Not many of those left, are there?
No,
not
at
many
all.
of those left.
Yeah, they're shrinking.
Good to see you.
Thank you.
Enjoy the rest of your trip, and we'll maybe catch up with the Antimony in the next couple of weeks, right?
Sounds good.
Okay, cool.
Cheers.